A very warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbarago. It's Thursday, the 2nd of October. We thank you for joining us at this time on the show.
All right, then let's begin your news now in South Africa, where Capitec Bank has reported a 26% jump in half-year profit to 7.99 billion rand for the 6 months ended 31 August 2025, up from 6.42 billion rand last year. Headline earnings per share, the country's key profit measure, also climbed 26% year on year. The lender declared an interim dividend of 26.20 rand per share compared to 20.85 rand a year earlier. In Cape Town at the African Energy Week Summit, the Mauritius Commercial Bank, or MCB, today leads the signing of a non-disclosed agreement between Etu Energies and Total Energies. Speaking to the deal, the Executive Vice President in charge of energy at the MCB, Matthew Thomas, says the agreement will provide funding for Etu Energies investments in offshore oil exploration in frontier Angola waters. Let's now listen to him.
What is more important is the fact that MCB and Etu work together to structure a transaction that help one of the strategic requests and demand of the Angolan regulators to bring additional barrels into production. It was an important achievement because Etu, as a local player, as an indigenous player, is taking stakes in deep offshore operations, learning from world-class operators like Total Energy in this case. And this is the first interblock development. What does it mean? It is from block 1706, development from that block connected to block 17, which is an existing production, an existing FPSO, and bringing new production at in a cost-efficient manner, reducing the impact on the environment when doing that development. It's one of the lowest cost emission operations that we know of. So it's a really proud moment for a bank like MCB, who is active, as you may know, across Africa to assist some of our indigenous.
Still at the African Energy Week, Seplat Energy, an indigenous company listed on both the Lagos and London stock exchanges, says the integration of new assets that were recently acquired is a learning curve in terms of culture, efficiency, and operational performance. The Chief Executive Officer of Seplat, Roger Brown, speaks to Frontier Africa Report's executive editor, Bosing Omofaye, on Wednesday in Cape Town in a fireside chat that focused on recent acquisition strategy, financing partnerships, and the evolving regulatory landscape in the oil and gas sector. Let's take a listen.
Our last two acquisitions have been corporate acquisitions. And corporate acquisitions means a living, breathing company with assets, liabilities, a track record, and very importantly, people, which means culture. And that is one of the first things we look at in any corporate acquisition is, do the cultures fit? Now, if you look at our latest acquisition, which is the Exxon Mobil MPN Shallow Water, Seplat 550 people, MPN brought 850 people. So bigger, more assets and everything else, a different culture. So a US company culture, but I would say what was good about MPN was that they ran it very locally. Okay, so we had 850 very talented, very experienced Nigerians, and therefore when you combine the two together, do the cultures fit? And we've been spending this year really looking at how we put it together and how we then have success well into the future. It's not something you want to rush. The 2020 acquisition we made were 100 people. We learned a lot from that with the Eland acquisition. Now this is much bigger, it's more complex. But we're excited, and I think there's an enthusiasm because Seplat's strategy, I think, is very clear. It's very clear in what we're trying to do as an indigenous company and really operate as first world, the best in the world operations based in.
A strong message of collaboration, cooperation, and defiance to continue the drilling of oil and gas is resonating at the 2025 edition of the African Energy Week holding in South Africa. The head of the African Energy Chamber, NJ Ayuk, says the continent will not stop drilling for fossil fuel, while an official of the U.S. Department of Energy, John Vols, adds that no country or group has the right to dictate how countries should pursue their energy sustainability. Let's take some excerpts.
Exploration for energy is bad. The state of African energy is resilient and it continues to go strong. Liberia just signed a few new blocks with Total Energies. Maybe Mike Sansa will tell us what he signed. We're hoping that Mike puts more money in Africa next year. But maybe he might tell us about Mozambique. I don't know. They'd say I shouldn't talk about gossip, so I don't do TMZ. But we're hoping that project starts in Mozambique because it's time for a country like Mozambique to drive that brain gas, so beautiful brain gas that we could use across our continent. Who don't want gas in Africa? It's a gas game because they're using it everywhere. And I dare someone tell Africans to stop because we're not stopping.
We have not been only service providers, we've been collaborators, building trust, sharing knowledge, and most importantly, listening to Africa's ambitions and priorities. This collaboration and trust with local authorities and partners have inspired TGS to invest more than $1 billion in Africa over the past 10 years. Our unparalleled multi-client data library, representing about 70% of all seismic data in Africa, 70%, continues to unlock new opportunities, de-risking frontier basins, revitalizing mature plays, and revealing potential where others.
In West Africa, the ECOWAS Bank for Investment and Development has approved $308.6 million to drive clean energy, industrial growth, and sustainable development across the region. The decision was made at the bank's 93rd ordinary session in Lomé, Togo. President Dr. George Dongo said the funds will back strategic public and private sector projects to boost regional integration and economic diversification. Finally, on News Now, the Nairobi Securities Exchange has launched a new banking sector index to track the performance of listed banks, providing investors with a transparent and reliable benchmark. The index, effective October 1, will cover shares of 11 banks, including KCB Group, Equity Group, NCBA, Cooperative Bank, Stanbic Holdings, and Standard Chartered Bank Kenya. NSE Chief Executive Frank Mwiti said the move demonstrates the exchange's commitment to innovation and positions it as a modern, globally competitive marketplace. I am Melissa Enoch, and that's it on today's edition of News Now. Our Markets Round returns after the break with Grace at the FMDQ Archives Room. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's markets review. Hello there, Grace. What are the markets saying today?
Hi, Melissa. Let's now track how the markets are wrapping up today, starting off with the equities as usual. In Nigeria, the NGX All-Share Index closed at the positive, up 0.19%. The BRVM in Abidjan fell 0.34% to 324.10. And the Nairobi Stock Exchange gained 0.45% to 178.96. In North Africa, the EGX advanced 0.36%, while in Mauritius, the CEMDEX gained 0.28%. And in South Africa, the Johannesburg Stock Exchange is 0.10%. Let's do a quick round on some of the Pan-African currencies. The Rand slipped 0.08% to 17.21 per dollar. And the Egyptian pound weakened 0.12% to 47.79. The CFA franc was steady at 558.17, while the Kenyan shilling held flat at 129.20. The Moroccan dirham firmed 0.52% to 9.12, and the naira lost 0.67% to 1,470 naira 26 kobo at the official window. Let's switch into the commodities data deck, beginning with energy prices. Crude prices extended losses. Brent crude fell 0.60% to $64.96 a barrel, and US WTI dropped 0.58% to $61.42. Natural gas gained 0.12% to $3.48, while Arabian gasoline fell 0.56% as of 12:45 GMT. Finally, two metals prices. Gold gained 0.33% to $3,910.50 an ounce, while copper strengthened 1.45%. Platinum rose 1.42% to $1,613.30, and aluminium edged 0.06% higher to $2,619. Iron ore declined 1.21% to $104 as at 12:48 GMT. And that's how money moves markets today. Back to you, Melissa.
Grace, thank you very much for those markets updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.